Sachin Shah of Emkay is here with me in the newsroom today to talk about markets. Hi Sachin, thanks for dropping by. Talk to us about how your own portfolio has been doing last couple of days. We are looking at breadth coming back, broader markets coming back, and I'm assuming a portfolio of PMS orientation usually has good 30, 40, 50% chunk in mid caps. How's the health of your portfolio?
Right, Ajay. So thank you so much for having us. You're right, absolutely. See, so we are our flagship PMS, which is MK Capital Builder. It's a multi-cap PMS, and we do have about good 40-50% allocation to the mid-cap and small caps. In fact, we also run a AIF, MK Emerging Stars Fund, which is actually only a small cap AIF. And we launched this sometime in January 2018. And as you know, that the BSE small cap index was down almost 40% at one point in time, just a couple of months back. We've been fairly patient about investing our money, and we've not invested too much money. So that's why we've protected a large part of our capital destruction. But you're right, absolutely, that what we are seeing is that the broader rally or the broader market is now seeing some bit of movement, and which is a good thing. So, it was down 40% at some point in time, the small cap index. Now it's down about maybe 32% odd. But the last couple of weeks, or maybe actually I would say last 5-7 trading sessions, we are seeing that the advance decline ratio, the breadth of the market is definitely getting better.
Sure.
We're also in the midst of an earnings season. So when we are seeing some of the results, I think the commentary is not as bad as one was expecting. So that's also another good thing. And a lot of things are in the price.
Sure, you're right in saying that the numbers are not as bad, commentary is not as bad, and things are getting factored in. But I'll get your opinion on the commodity pack, after a couple of moments. But right now, M&M number, the sales number has come in around 46,000 odd. The stock is trading. In fact, auto has been one of the areas which has rebounded very sharply. Why I was talking about commodity pack is JSPL is in focus right now. My colleague Vivek is here to talk about why that particular stock is in focus ahead of Monday. What are the factors or events which are lined up for which it should be on traders' radar, and then we'll talk about the commodity pack. Vivek, fill us in.
Well, Ajay, very simple. JSPL will be on everyone's radar. What you have to watch out for, number one, JSPL, most of their metal pack is doing quite well, and JSPL has also participated in the rally. But when you're talking about the company-specific developments, number one, what we are understanding is that the Supreme Court hearing, as far as the Sarda mine is concerned, something which is quite important as far as the company is concerned, this is up for hearing. Sometime next week is when expect either a resolution or some amount of communication from the Supreme Court. The other important thing, we are talking about the Gare Palma coal mine. Remember, this particular coal mine is very important for the company. It is the lead distance for the company's reserves is something that is quite close to here, and it will be a significant benefit as far as JSPL is concerned. Now, this could add a significant amount of EPS, and you could see EPS estimates actually getting higher if the company wins this particular Gare Palma block. Lastly, you're also watching out for the results on 5th of November. So a lot of triggers are waiting JSPL, and the stock is buzzing in trade today on anticipation that the Gare Palma coal block is something that the company may bag in its kitty. However, Vedanta too is in the fray.
Right. Thanks very much for that, Vivek. Sachin, I understand commodity is an area which you have avoided as far as your portfolio goes. But let's talk about autos. That one is in focus. Mahindra numbers just came in. The stock at a 5-year low right now. Though there has been some rebound from the near-term lows in autos, the sense is that perhaps the big recovery may not come. You have looked at that space for long. Talk to us about which part of autos do you like?
See, we have been focusing on the rural auto more. Right? We strongly believe that the kind of the mobility that we have in terms of the public transport is a huge vacuum as far as the rural markets are concerned. Right? Also, what we have also seen is that this year we've had a beautiful monsoon. This kind of India map with so much of blue and green all around. I don't remember when I saw it so last, right?
Sure.
So, we strongly believe that it's a matter of now 1 or 2 more quarters, and the demand from the rural auto side will be very, very strong.
Sure.
So we are very much focused that wherever the products are there for the rural side of the country, we will see a huge demand coming in the next couple of quarters.
I really hope so that happens, and this mild improvement on a month-on-month basis continues into a bigger improvement, because auto does have a ripple effect on the rest of the economy. But Karanya is here from the studios to talk about the numbers which have come so far. Karanya, the reading month on month has not been that bad.
Absolutely, Ajay, and it's on expected lines because October saw the festive fervor at its peak and OEM discounting was as deep as it could get. So on back of that, the expectation was also high. Some have been able to deliver, some have been able to outdo it, and some have disappointed as well. Let me talk about the recent one. For instance, Mahindra and Mahindra auto segment has seen a very solid performance this time around in the excess of 51,000 units. So very good growth seen there sequentially, YOY as well. And do remember that we were expecting 48,000 odd units and they actually beat our expectations by a decent margin. Tractor business has also done well for Mahindra. The numbers have come in bang in line, 47,000 odd units. Our expectation was also exactly 47,000 units. What has been tad below expectations was a Maruti, but on a sequential basis, 25% growth is definitely something to cheer about at a time when the market is sinking big time. 1.5 lakh units even alone is not a bad set of numbers to be delivered by Maruti as well. Ashok Leyland was a bit of a disappointment. We were expecting them to deliver more than 10,000 units. They only delivered 9,800 odd unit. Our expectation was exactly, to be precise, 12,000. So definitely a disappointment there. Bajaj Auto, as always, has maintained their momentum, 4.6 lakh units. Definitely a good set of numbers by Bajaj. Escorts has seen a decent uptick as well. So yeah, largely I would say there are no negative surprises, and that's perhaps the reason why the stocks are also being able to hold out.
Sure, for that, Karunya. Sachin, let's talk about financials. That is one area which you have represented in your fund. Private sector corporate banks. There's one private sector corporate bank in the middle of a lot of trouble, forcefully being had to raise money. One of the promoter exited because of lending issues. But the healthier ones, ICICI, Axis, that universe. Tell me how good things are over there relatively.
So we strongly believe that couple of names that you mentioned have a great outlook. If you look at it, their liability franchising, right? The CASA today is good 40-50% for these banks, which is a very, very important thing. Second, if you see the last 5-7 years, we've had a fairly rough patch as far as the corporate NPAs and the quality of the asset. These banks have actually written off a lot of these things out. So the worst is really behind us.
Sure.
And within the valuations, if you see the gap between the best bank today in the country versus this number 2 and number 3, there is still a decent gap. And we believe that the outlook, and very important thing is that the top level managements have completely changed. And if you see their commentary, the way they are progressing, it's a complete no-nonsense approach. And it's a clear growth guidance of at least 15-20% for the next 2, 3, 4 years. So we strongly believe this is a good secular growth story for the number 2, number 3, number 4 bank of the country.
Fair point. In fact, there's another corporate bank which I was referring to in the middle. Yes Bank, of course, will raise, market is expecting something on fundraise may come, but results is also something to watch out for. And a lot of market share on the corporate side, which Yes Bank lost, actually was gained by the names which you were talking about. But my colleague Varun is here to talk about, from the market standpoint, there's a lot of long shot happening. What are the factors which will determine whether this bank survives in a healthy manner going forward? People are expecting commentary from after results, but Varun is here to put all of these things in perspective. Varun?
Yeah, hi Ajay. So in terms of, the first thing which you talked about, which is longevity of this bank and its ability to keep going as a going concern, I'd say the fundraise is the most paramount thing to consider. Now, if this fundraise of 1.2 billion or 8,500 crores comes into the bank, I'd say the capital adequacy woes are abolished. So this 8% range which they keep flirting with, at least that will go away, and yes, will have the fuel for growth going forward. Now, keeping the dilution aside, which will probably be to the range of 50% because they're adding around 50% of the market cap of yesterday in funds, 8,000 crores, half of around 16,000 crore. So dilution will be high, book value per share will come down, but still there's some headroom for the stock to appreciate as the multiple might change. The multiple today, which is around 0.5x book and 0.7 times 1 year forward book, might really upgrade post this infusion. So that's one thing to consider. Second, coming to the results were expecting a slowdown as well, because Yes would have not been able to lend to the tune that it wants. So NII PPP should definitely see a reduction, and your PAT actually should turn negative this quarter. So most brokerages are expecting a loss. Now, key things to look out for: how loan growths have changed, how deposits have changed, and the main thing is what the slippages are from the BB below grade book. If there's enhanced slippages and there's a huge write-off this quarter, that will only further impair Yes's book value and make it all the harder for them to come back despite the fundraise. So the numbers should be out later this afternoon. We'll update you once we have the latest from them.
Sure, for that, Varun. Sachin, you were talking about how earnings this time, second quarter, perhaps the estimates were so low that people are getting refreshed, or perhaps indeed the numbers are not as bad as people thought. Commentary is also not very negative from many managements. Tell us a couple of instances which you observed.
Yeah, I think the credit goes to some of these auto companies, because in spite of huge double-digit volume degrowth, if you see for the September quarter, their margins were fairly stable or probably a little better. So the negative operating leverage did not really play out as much. Basically, they've done a decent cost rationalization. Maybe they've got a little better realizations. So the profit dip there was not as bad as one would have expected. So I think from that perspective, autos have done a decent job.
Also, talk to me about hospitals. Briefly, off-air, you were speaking about this part of healthcare, which did not get adequate attention last couple of years. Right. But now we are seeing a lot of managements taking proactive help to reduce their pledges, Apollo. There are hospitals which are new getting listed. And generally, there is the health of this sector is improving. Do you think there's a strong case to look at this space?
I do believe so. Because, what we have seen is that we are seeing a consolidation in this sector now, right? What we are seeing is that companies are now trying to optimum utilization of their capacities, right? There is now decent amount of clarity in terms of regulation also. There are a couple of still challenges, but I think that will also get sorted out very quickly. So I think from that perspective also the worst is behind for this sector, and the managements are much more focused in terms of generating good ROCs for the shareholders.
Right. In fact, stay with me, Sachin. My colleague Jayesh has done some work on talking on that point, that how the analyst community is looking at the stocks which have come out with numbers so far. Which are the stocks which are witnessing continuous upgrades, and which ones are actually witnessing downgrades? Jayesh has looked at the list of the numbers so far. Jayesh?
Let me just highlight that the total stock universe that we are working with is 265 stocks that are tracked by at least 10 analysts in the market. And if you have a look at the October profile, how these analysts have revised their target prices, most of them have in fact revised them upwards, which is 56%, while 40% of the stocks in the universe have seen a downgrade in terms of their target price, while 4 remain unchanged. Now, we took this one step forward and also looked at the valuation picture. Stocks trading at P of more than 50 times are 20 number of stocks, and you can see that 85% of these 20 stocks have seen an upgrade for the month itself, while we have 10% downgrades and just about 5% remain unchanged. In terms of the P of the stock being in between 25 and 50, there are 60 such stocks that we are counted, and 75% of these have seen a target price upgrade only in the month of October. 22% downgrades, while 3% remain unchanged. In terms of the stocks that are less than 25 PE, those are 185 stocks, and there's an even split between the upgrades and downgrades. 47% and 49% is where we stand at. Analyst community is definitely favoring the high PE stocks, is what we can decipher from this. In terms of individual stocks, which have seen an upgrade, a lot of asset management, or in fact, both the asset management companies that are listed in India, those have seen handsome upgrades, 19 to 22%, while we have Avenue Supermarts also featuring in that list, along with Bajaj Finance as well as Escorts. Moving on to the stocks that have seen significant downgrades, your usual suspects feature in this list, which is RBL Bank, Z, Sterlite Tech, PNB Housing, and you have Mahindra CIE, which have seen 10 to 18, 30 odd % downgrade in the month of October itself.
But Sachin is still with me right here in the newsroom. Sachin, talk to us about some unique plays which are available right now. And because they are mid-cap in nature, they got corrected quite sharply. Say Leisure Park, some of them names are listed. Some of the resort kind of plays which are listed. We are seeing some amount of more traction coming in for these kind of plays. Do you like them?
So definitely, we've been fairly positive on this travel and the leisure space. If you think from a top-down approach, the kind of the consumption patterns that we are seeing on the travel and leisure, we are seeing, last 1 year we are seeing some slowdown in the GDP growth and all of that. But when I see all around, the spending budgets as far as the travel and leisure goes has been just increasing across, right? So we definitely like that space a lot. Within that space also, there are decent amount of quality companies which are debt-free, cash flow generating companies, growing companies, and today probably available at very, very reasonable valuations. So this is one space that we've been invested and we are fairly positive for the next few years.
Okay. Before I let you go, just a quick word on area of the market which you find a strict no-go on valuation terms and risk reward is fully priced in right now.
So, we strongly believe that some of the very, very large blue chip companies, which are trading at probably 50, 60, 70, 80 P, it's going to be difficult for investors to make high double-digit returns if you take a next 3-year view.
Okay. All right, Sachin, on that note, I'll thank you for coming down to our newsroom today and have a chat about markets. Good luck running your portfolio and strategies as well.
Thank you.
Thank you very much for your
Pleasure.
time. That was Sachin Shah of Emkay.